Ladies and gentlemen, it is 12 p.m. Central Time, first day of July 2014. Very glad to have you with us today. We have Richard Weissman of WeissmanSignals.com. He's going to take us through his methods and share some of his thoughts on markets and how we can approach them. How you doing, Richard?
Good. Good to work with you again, James.
Always a pleasure. So, shall we get started?
Sure. So, what I wanted to do today was introduce people to the materials that they receive when they sign up for their 2-week trial. So, the last session that we did together, basically, we introduced people to the signal sheet, and basically we spent 45 minutes how you work through the different tabs that are in the signal sheet. So I wanted to do today was something a little different. I wanted to work through the different documents that you receive when you sign up, and collectively I call those documents the welcome pack or the welcome package, because my fear is that people sign up for this 2-week trial and they receive this, series of files, and they're all quite convoluted, and without guidance, maybe it just becomes overwhelming, and they say, I'm not going to read through all that stuff. So I wanted to actually use this video as an opportunity to make it a little bit more user-friendly.
Excellent.
Okay, so in a second, you will start seeing my screen, and I'm going to actually start showing the different documents.
We can see your screen at this time.
Great. So when you get the welcome pack, it's actually containing these various files, and we'll go through each one of them. The Forex subscription, the futures subscription, the newsletter assets and pricing, the newsletter contract specs document, and it'll always have this, this introductory risk disclaimer. In addition to that, it also has frequently asked questions. Frequently asked questions, I have a feeling that's going to be a video in and of itself, but we'll see how we do time-wise. Let's take the first one first and look at welcome and risk disclaimer. And this, you can see it's a Word document, and what happens is it opens up and you can see this basic welcome document. So this is actually going to be the body of the email you receive when you receive the welcome pack. When you ask for a 2-week trial, this is the body of the email document, and then each one of those other documents that I had mentioned, they are attachments. Okay, and what you'll see is in the body of the email it says, welcome to your trial subscription. And then it says, attached is a complete list of assets covered by the signal sheet, along with contract specifications, a frequently asked questions document, our subscription pricing structure for various levels of service. And actually, in this body of the email document that you receive as a response to your inquiry for a trial, it says, remember to read the frequently asked questions attachment, and especially question 12, and watch the Understanding the Signal Sheet video on the educational page of our website, and here is the link to that educational links page, and in that page, of course, is the video that we did together, I don't know, maybe a month and a half back. And then, of course, it has the disclaimer that this is an educational service. It's published for informational purposes, and the risk disclosure document, the risk disclosure statement, the CFTC Rule 4.41, talking about hypothetical performance, and really all of that is a long-winded way of saying, hey, we're going to give you this material. And the reason that we're giving it to you is so that you can learn how to trade. You know, and if you decide to take the signals that are in the signal sheet as trading signals and enter them, that's fine. You can do that, but that's not the purpose of the document. The purpose of the document that you're going to be receiving, the signal sheet, is to teach you how to trade, to educate you. Okay, so that's the first thing you get. Questions so far, James?
No, just
Okay,
very clear hypothetical environment, and good to recognize that, to say the least.
good. Okay, so let's dig into the first one. So basically, the signal sheet, if you remember from the first video, is broken into various tabs. And there's FX, and then there's futures. So let's look, if you only subscribe to FX, to Forex, what we're going to give you is the following. And this is, by the way, in your welcome pack, you're going to have something called Forex subscription symbols and descriptions. So if you open up that Word document, it tells you, oh, by the way, if you're going to be an FX subscriber, you're going to get the following pairs. So obviously these are the four majors: Euro, US dollar, dollar yen, cable, dollar, pound dollar, and then the Swissy, dollar Swiss. In addition, we're going to
spot, correct?
This is spot Forex, exactly. In addition, we're going to give you the two commodity currencies, Aussie against the dollar and dollar CAD. So those are the six pairs. In addition to that, we're going to give you the commonly traded crosses, which is Euro Yen, Euro Swiss, and Euro Pound. Now, Euro Swiss, unfortunately, the Swiss have decided to peg to the euro now, so it's kind of dead. But if that peg ever, yes, but if that peg ever gets removed, this will be a viable pair, and it had been a viable pair for decades. So we're not going to get rid of it. Okay, so notice that the symbols are right here. So when the signal sheet updates and it gets us, and it says, oh, by the way, we want you to bracket euro against the dollar, it will use this symbol, which is basically a universally recognized symbol for euro against the US. The only other thing about this page or this document is that we are going to include precious metals. So the metals that we're going to include are the ones that are commonly traded, which is gold, commonly traded by FX traders. So we've included it in an FX subscription. And then silver we're going to include through the ETF SLV, and then platinum. The reason we're doing SLV is that silver futures are such a huge contract size-wise that if we included the silver futures, it would create a volumetric or an exposure imbalance. So we prevent that by doing the ETF.
Understood.
Okay, questions about this first page?
No, that was a great explanation.
Good. Okay, so we're done with that. That's one of the pages you're going to get. I'm sorry, that's one of the documents you're going to get in the welcome pack. So that was the first one. Now we're going to go on to futures. Futures is going to be a little more involved. So just because there's more of them. Okay, so the first thing you're going to see when you open up the futures subscription symbols and description document is this. You can see it says futures package symbol description, and then it's going to be broken up into these tabs. So it's going to show you the outright root symbols for the future symbols that we trade. Then it's going to give you a description of each of these, and then it's going to show you the months. Now these months are just universal. They've always been this, they will always be this, you just memorize them. So you can see F is January and it ends in Z December, end of the alphabet. Okay. So for example, right now in WTI, West Texas Intermediate Light Sweet Crude Oil for delivery at Cushing, Oklahoma pipeline, the symbol is CL. That's the root symbol. But when you see a signal in the signal sheet, what you'll see is you'll see CL, the root symbol, Q for August, because the actively traded futures month is Q, and then you'll see the year, which is 14. So just to put this in perspective and show you a real trade. So I want you to see that right now what we're trading is we're trading PL is the root symbol for platinum. V is the month for October, and 2014. So we're trading October 2014 platinum. For another one, for example, ES is the root symbol for the E-mini S&P 500 futures. U is the symbol for September, and 14 for 2014.
And did I see correctly that you just had a rolling over in one of your positions?
We did. We had an actively traded July platinum trade that went into first notice day, and the volume stopped trading July and started trading October. So we rolled out of the July and we rolled into October, and that's how we got this position in October.
And how many notice days do they give you before expiration?
It depends on the futures contract. Every contract has its own specifications. So some will expire an entire 2 weeks prior to the contract month. Like Brent futures, they expire on the first business day prior to the 15th calendar day of the month prior. So, for example, right now, actively traded Brent is August futures. So that's going to expire on July 14th. The first business day prior to July 15th.
So you'll roll over on which day, ideally, if you were in a position?
We'll probably roll over on the 10th of the 11th.
Okay. Fair enough. So you try and give a 3-day...
Yeah, a couple days prior. I mean, we really watch the volume to determine the rollover, all things being equal. So when the volume starts rolling into the new front month, then we start rolling. And we wait for that. Almost all the time, yeah. So unfortunately, every futures contract has its own specs. So some of the futures contracts, like this E-mini S&P, you can see right now it's actively traded September, and we actually just bought it today. The signal sheet just bought it today on the 1st of July. So it's not going to roll until until the calendar month September. So you gotta just memorize them, and the nice thing is I do kind of give you a heads up prior to the roll. So a contract like Brent is going to roll. The August Brent will roll in calendar month July, mid-month. By contrast, the September E-mini S&P is not going to roll until September of the calendar.
Well, that's good to be aware of.
Yeah, and that's one of the nice things about the service is that I'm always watching it. I'm watching it on a daily basis, and I'll let you know as a subscriber when we're going to roll, assuming that we have an active position. If we don't have an active position, I'm not going to say anything about it.
Fair enough. It'll just come through on the next signal, the new month, essentially.
Yeah, the next time I am monitoring and something happens, then you'll see it for the new month. Yep. Okay.
Okay, great.
All right, so these are the actively traded futures that we trade. These are their core symbols or their base symbols, and these are the descriptions of the assets that correspond to those symbols. And you can see it's all over the place. It's you have some refined products, you have some of the softs here. Some of the softs here. You have the grains here, the meats, metals. Financials, and then here's crude oil, natural gas, and rates. Now, the reason that we don't include the currencies is, of course, we're using the spot currencies.
That does make sense.
Okay. Now, the only other thing is we also do some spreads. The spreads all tend to be or don't tend to be, the spreads are all energy. Because remember, the signal sheet started as an educational service, which was an add-on for people who took my courses. and the courses are almost universally attended by professionals in the energy industry, professionals at super major oil companies or power companies or gas marketing companies or banks that are trading energy. Consequently, they trade a lot of these energy spreads, and so I do give you these spreads as well. The spreads have their own symbols, and you can see the symbol, the core symbol for the TI Brent spread is CLBO. The core symbol for the unleaded gasoline crack spread is RBCL. Now, when I say core symbol, what I mean is when we get a signal, it'll be RBCL and then contract month Q and then calendar year 14. Okay.
So we just covered the spreads. Do you want to maybe point out the most recent spread that the signal sheet had?
Yeah, let's take a look. So we don't have an active position. We actually had one, which got stopped out of the remainder just today. So we were long the RBHO, the product spread. So RBHO is the core symbol. Q, it was the August 2014. So here you can see how it relates to the core symbol here. It's the RBHO Q August 2014, and RBHO stands for unleaded gasoline heating oil, or some people now call it the unleaded diesel spread. It's the product, it's the refined product spread. Basically what it is a refinery will want to know, when I crack my crude into these refined products, how much do I get on the RBOB versus how much do I get on the diesel? And if I'm getting more on the RBOB than on the diesel, maybe I want to run refineries that are producing a higher output percentage of the RBOB unleaded versus the diesel. Whereas if I'm getting more on my diesel, maybe I want to run more heavily on the refineries that are giving equal parts unleaded to diesel. So there's actually something going on in the physical commodity realm that relates to these spreads. I know
so
that
more hedging than speculation to an extent.
Yeah. Now you can, as a speculator, take these signals, of course, but it is really a hedger's spread.
Okay, and it sounded like you have two different types of spreads. Is that fair to say? One is a separate product, same month. The other is same product, different month.
Yeah, basically, here's what it is. These are calendar spreads in natural gas, and they're seasonal spreads too. So this is a winter-spring spread. This HJ is a winter-spring spread. It's the March-April, and then this is the fall-winter spread. It's the Oct-Jan. So remember too, when you're rolling, when you're doing the Oct-Jan, it's a different calendar year. So it won't have a year attached to it. When it shows on the signal sheet, it'll just show core symbol, NG, natural gas, and then VF. It won't show a year because it's two different years. Right now, for example, the VF, the Oct-Jan is 14-15. So it's the October 14 and the January 15.
And do you tend to stay with those seasonal spreads as opposed to maybe taking March versus January?
Right. Basically, you got to remember these are spreads that are traded in the commercial universe. In other words, super major oil companies actually have people on desks trading these particular spreads. And the reason why they're trading these as opposed to a March against July is that they are seasonal. It's winter against spring or it's fall against winter. So they tend to be higher volume than other months.
That's excellent. Thank you for explaining that.
Sure.
And I see that you have some more ETFs.
Right. Basically, we're down to 3 ETFs. I've tried to play around with this and give people what they are asking for. So basically, we are doing the silver ETF because the contract size on the actively traded CME group 5,000 ounce silver is just so big that if you trade it, it ends up exposure-wise swamping out other assets. So by
It's
using
distorting.
yes, it gives you too much exposure in metals compared to exposure in other asset classes. So by doing the ETF, it reduces the exposure, and that way, if you get a signal in platinum, gold, and silver, it's the SLV silver, so it doesn't over leverage you compared to other asset classes.
So I see that you cover silver in the futures package and the Forex package.
Yes. Now, basically, we cover metals in both packages because futures traders trade metals and cash forex or spot forex traders also trade metals. So everyone gets metals. Okay.
That's great.
Okay. Moving on. I do include the SPY just because it is so popular. There's so much demand. People that are interested in receiving trials, people that are subscribing, everyone wants the SPY. So basically, we give you SPY, which gives you an ETF, and we give you the E-mini S&P, the futures contract. Now, I will warn you that if your position size, if your account size is small, you might want to just take one or take the other because they do have a very strong positive correlation to each other. Let me explain. Let's go back to the signal sheet. And what you'll notice is that today, 7-1, you've got long both the E-mini S&P and the SPY. So they're very high positive correlation. So if you're small, you might want to just choose one or the other. But if you're large enough, obviously, you can do both.
So you're basically going to have two winners or two losers.
That's my opinion. Yeah, is that the correlation is so strong that it's really like doing the same trade twice. Okay.
And not to mention the SPY doesn't have as long of overnight hours.
Right. The SPY, you're really going to be stuck with the potential for overnight risk. So keep that in mind.
Okay.
All right. So that's that one. And then one of the other ones that people were interested in is this TVIX. Now the TVIX is an interesting thing. It's an ETF which is 2 times the implied volatility SPY. Of the S&P 500. And basically, what it enables you to do is to get a play that I specifically. There's something unusual about TVIX. TVIX is a counter trend only play. So in other words, it's not looking for low vol breakout. If you remember the other video we did, Understanding the Signal Sheet, we had 2 different types of models that were running. One was a low vol breakout, and the other one was a mean reversion with a long-term trend following filter. The TVIX will only take a short trade. It will so some people have different relationships with brokers. Some people aren't allowed to go short. So know from the get-go, TVIX, you're only going to get a short signal. So it's only going to go short if it's overbought in the context of a longer-term bull market as defined by its 200-day moving average.
So that's a pretty rare signal, I would.
Yes, it's a very rare signal. It's really going to only occur, I don't know, maybe 2 times a year.
Just helps round out the performance of the signal sheet.
Yeah, and it's a nice high probability play too. In other words, what it's saying is anytime this TVIX gives an overbought indicator, we're going to go against that overbought indicator and count on the idea that volatility will quiet down again. So
okay, well that's good to know. Good to have in the arsenal.
Yep. So it's a nice add-on. So really, this page is a great primer into, and our explanation that we just went through in this video is a great primer into how do futures work, how do you read this core symbols, all that type of information you've just received now. Okay.
And is it appropriate to say that certain brokers will have different symbols, if you will?
Yes, and keep in mind, I am using the innate, commonly used CME group and ICE symbols, but I'm also using the ones that, and perhaps I should change it. So I'm using LC for live cattle. The electronic is GL. I'm using LH for lean hogs. The electronic is HE. So I've just changed it actually. So now I'm going to be using the electronic symbols.
And what were you using? The pit?
I was using the old pit, and the reason is that so much of the liquidity in meats is still pit generated. But still, I think most people using the signal sheet, they probably are using an electronic broker, and probably they want LG and HE.
Agreed.
Okay. Yeah, but these are the universal core symbols. But yes, your broker symbol logic might vary.
Yes, I think I've seen some different throughout the days.
Yeah. Now, what I will say is these months should not vary. Those
Understood.
symbols, F through Z, those should be universal. And if your broker is using something other than F through Z, they probably need to get on the stick, because
yes.
That's a problem. Everyone uses those. Okay?
Okay.
Good. All right, so that was that. Let's move on to the assets and pricing. There's really not much to this one. It's basically just talking about the different packages. So if you're getting Forex only, you will be getting these symbols, and also it will include the metals. So let me show you that. So it'll also include GC. And it will include GC, PL, so gold and platinum futures.
Mm-hmm. And SLV?
And then the ETF SLV. Okay, so that's that. Okay.
We just covered these, in fact.
Yes. Now, if you're only getting futures, it will include all of these outright contracts for all of these asset classes and all of these ETFs, which we, like you said, we just covered this, and the commodity spreads. And then here's the pricing for the different levels. Now, some people are going to get everything, meaning everything that I put out, they want to get it. So that's their pricing per quarterly subscription. And then their pricing, if they're getting all signals.
So what are those? Could you read those off?
What are the, you mean for the quarterly subscription, all signals? Mm-hmm. So all signals means you're getting spot, FX, and futures. And if you're getting all signals on a quarterly basis, you're paying $500. If you're doing futures only, you're paying $275. And if you're doing spot Forex only, you're paying $275. If you're just doing a monthly subscription, then for all signals you're paying $175. If you're doing Forex only for a monthly, you're paying $100, and if you're doing futures only, you're paying $100.
Okay, that's excellent.
Okay, everything else is just the disclaimer, risk disclaimer.
Which is also included in the welcome email, correct?
That's also included on the body of the email of the welcome email. Yes. Okay.
Okay.
All right. FAQs, unfortunately, I think that's going to be an entirely different video. It's just too involved.
That's a great place to end it. We've been here for a half hour.
Okay, good.
We covered a great substance here.
Good.
Forex, futures, and of course the pricing for all of them.
Yep.
Been a great pleasure to be here with you. And
great.
Just a heads up to everyone that's watching, we will have another video in the future, frequently asked questions. We do hope you'll be able to join us for that.
Thanks for your help, James.
It's my pleasure. Have a great day, Richard.
You too. Take care.
Goodbye.